Hello and welcome to the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke. Today I have Rama Chunchu. He is the founder of USHA Investment Group based out of Greensboro, North Carolina. Rama, thank you so much for joining us on the show. And how you doing, my friend?
Thank you very much, Dwayne. Thank you for this opportunity. I'm doing great. How about you doing?
I'm doing really good. I appreciate, like I said, we was talking earlier, kind of like a little bit about your background. Very interesting company because I love the like North Carolina, South Carolina markets. Those are some very good. And look like you guys are specializing there. So I'd like to introduce you to our audience, kind of starting with your background, like how you got started, because I understand you have an IT background and then got into multifamily. So can you tell us about your transition into that space?
Sure, absolutely. So basically, originally from India, I came to US in 2007. So into IT space. So I worked for IT space around 15 years, and also like around 2014, 15 time. So through my another college friend, so I started exploring real estate space. So that's how I started into real estate. So initially, I focused on single family space, mainly North Carolina markets. I did few deals in single family space, and also I was working IT full time. So and also working full time and managing these properties is a bit challenging. So I thought I need to find some other way, some other way to invest. That's how I started learning more about multifamily space. I listened a lot of podcasts and also read a lot of books, and that's how I started into multifamily space. And I started with passive investing initially, a couple of deals, then switched towards active side as GP. Last year I invested in one deal in 64 units in Charlotte MSA. I'm focusing on right now. My main focus will be on multifamily space.
So how do you kind of got
Big-
introduced to kind of like your first deal? I know like syndications, 506 speed that big, obviously came out during the Jobs Act 2012 and become more popularized as more investors start to get access to these types of deals. Did you have friends, family, colleagues that were also invested that say, hey, obviously, we're doing, single families, rentals, but then jumped into this big stuff? Was it something that you were always planning on doing, or was there something that say, hey, I can do these big stuff like other investors are doing?
So I think it's not planned actually. So I somehow started real estate single family space, but because of managing full time, and this one is challenging. So that's how I came to explore a little bit other stuff. And so that commercial real estate book by Peter Harris, somehow it came to me. I
Mm,
read that book, and I like the concepts and how you can scale. You can purchase more bigger properties. Using OPMs, right? Other people's
exactly.
money and all those concepts. And also you can hire full-time property managers to manage this stuff, and those kind of some benefits going with bigger properties. So that's how I started multifamily space.
Awesome. Yeah, and then you mentioned that you guys are based out of Greensboro, and all of the syndicate I talked to in the multifamily space, they love to get into that North Carolina, southeast area. Is just as far as like just good estate, as far as like good favorable landlord laws, good business environment there, just fair taxing. So just like a good overall environment. You happen to be like in the trenches there. Are you seeing a lot of difficulty or any hurdles as far as just the increased demand that's in there from other investors because it's such a good market?
Yeah, definitely, a lot of good points from market point of view. So, population growth, job growth, and landlord friendly, all the points you mentioned. Because of that, a lot of investors attracted to these markets. And because of that, a lot of competition, prices also a bit higher, so you have to compete with a lot of other investors. Yeah. Yeah, I see a lot of demand in this space and a lot of competition, and also low cap rates and high prices per door.
Yeah, absolutely. And as far as kind of like the types of deals you like, you had mentioned that the 64 unit. Um, are you guys looking for heavy rehabs? Are you looking more of a managerial changes, lease ups, things like that nature, or just kind of anything that looks good and you can kind of figure out from there? But is there any particular criteria that you guys have?
So mainly we're looking for light value add deals, and like built like after 1980, where you had deals like A, B, C class properties in good location like A and B locations with like some kind of issues with that property like mismanagement or below market rent, something like that. So we'll identify those kind of properties and we'll come and we'll increase efficiency in management side, and also bring that rents to market rents by doing organically or forcefully, like renovating interiors or in the exteriors like that.
Mm. And as far as kind of like, I know that you had mentioned earlier, cap rates are more suppressed, a little bit more competitive marketplace. Are you also handling the asset and property management as well to kind of, be able to kind of control as best as you can, kind of margins and a lot of your expenses, things like that? Or do you also kind of outsource third-party management as you kind of plan to scale up?
Yeah, for the 64 units, we are doing a in-house property management. So because it will not support third-party property management, by hiring full-time leasing agent and full-time maintenance person is a bit challenging. So we are going with in-house property management, but it depends on deal by deal basis. Mostly we are at initial stages, right? So mostly we'll go with third-party property management to manage the properties.
Yeah,
So
absolutely.
they have expertise in these markets and they know how to run these properties.
Yeah, that makes a lot of sense. And I'm pretty sure you're getting this question from your investors and other fellow colleagues is interest rates. Right now the market's changing. You talk to a lot of these different experts, you're getting a lot of different answers. It's really hard to kind of tell. It's more so when it comes, you kind of take it as it is, but obviously you kind of plan as best as you can. But can you share some of the conversations that you had with investors, colleagues, as regarding kind of your plans moving forward with high interest rates, affect the deal flow as compared to how it was like 3 years ago when it was like a little bit different look then?
Yeah, definitely. Interest rate, high interest rates definitely impacting overall returns, and also it's impacting deal flow also. So there are multiple ways. So because of high interest rates, we need to pay high mortgage monthly mortgage payments, so that will impact returns to investors, cash flow to investors. Second point is from deal flow point of view, because of high interest rates, sellers still expecting higher prices, so they are not coming down as per market. So because of that, not many deals are coming to market, and because like sellers might have purchased with higher price and they need to benefit from they need to get their returns for their investors. So selling for lower prices, that will impact their investors, overall returns to their investors. So that could be one reason. And yeah, definitely we are actively looking for deals. So if a deal makes sense from investors point of view, from cash and cash at like 6 to 8%, IRR at least 15%, AR around 18 to 20%. If we meet those kind of criteria, we will go for it. Since like interest rates are high, we are underwriting with higher interest rates and current market conditions. Yeah.
Yeah, those are great points there because I mean obviously the investors are looking to preserve and grow their capital, and things that a lot of investors that come to me that are doing coming from other previous deals like 1031 exchanges, and so it could be like a tax play. And of course I'm pretty sure you guys are looking at all the kind of additional tax benefits that you can get from it. So it's kind of like, I know that the interest rates are high, we're probably buying at a higher premium, but along with good cash flow, good returns, but you get the additional benefits, as far as kind of like as compared to just investing in stock where you're just, looking at it from a real higher tax burden, if you're just like a straight a stock or a bonds investor.
Yeah, definitely. Still, real estate is or multifamily is better place. So because so everyone needs a roof, right? And and also compared to other commercial assets, multifamily is better. Better asset class. Because
Yeah.
like everyone needs a roof, and so yeah.
Yeah, absolutely. And it seemed like just kind of based off kind of your journey is that you definitely benefited from a lot of mutually beneficial partnerships and just kind of putting together, you obviously have your passive investors, other, joint venture partners and things like that. Can you talk to people that are aspiring to get into the space as far as the ways that you can find good partners and build trust in order to, formulate, a good outcome? Because obviously everyone it's got to be a win-win situation. What are some steps that you took that made you successful?
So definitely, from there are two aspects, right? Passive investing and active investing. So passive investing side also you need to, network with, right operators and find right operators for your investments. From active side, in order to be, GP side, so multifamily is a team game, you cannot do it alone. So in order to operate effectively or efficiently, so you need to work with experienced operators or other partners who can leverage who can complement your skills, and we can you can leverage other skill sets with other operators. So the best way I did is like I attended various conferences like virtual conferences or in-house in-person conferences, and also listen podcasts and reached out these guests and understanding their background, how they are doing stuff, and also reading books and and attending a local meetup, something like that, and asking the referrals, so asking referrals with other investors in this space. So that's how you can find, you can meet experienced operators and also start building that rapport. It's not overnight, right? So it will take time to build that relationships. Try to understand what they're expecting, what kind of skill sets they have, how can you complement their skills, and how can add value to other investors, something like that. It's always
Yeah, I love
starting.
yeah, I love how you kind of framed that there, because like I said, it is a team sport, and you're gonna have to be working with others, which kind of leads into my next question, because you had mentioned meetups and conferences and meeting people in person or at least virtually. You guys do a lot of education for investors and other partners alike, which I like, and I always do in our platform, because the more educated, the more confident, where you're not really per se selling them, but you're presenting this opportunity, and if they have the same at least base level knowledge of what they're getting into, it's a more sound investment for them that makes sense. Can you kind of tell us about kind of the stuff that you guys do? I understand you guys do like a virtual conference, a lot of investor meetup, which promotes education and kind of fruitful relationships.
Yeah. So one of the the things we are doing is like running podcasts and also conferences and also webinars kind of stuff. So main purpose behind that is like uh, and sharing experience of experienced operators, how they are running, what kind of systems and processes they are following, what kind of communication they're doing with their investors, what kind of what are their best investing experiences or challenging experiences, learning from their mistakes and implementing right strategies into our own syndications. And also it's kind of and also directly you can learn from these experienced operators, and also it will give opportunity to network with experienced passive and active investors who are doing like lot of deals, 20 deals, 30 deals, something like that. So it's a direct access to these experienced operators, so you can directly learn from this one, and to avoid any kind of mistakes.
Yeah, that's
So
one thing that's biggest key is like learning from. I mean, obviously, we want to minimize mistakes. That's kind of the biggest key to learning is mistakes. But if you can learn it through other people, to so you don't make like really detrimental moves, especially if you're working with investor capital and things like that. And there'll probably investors that been through different multiple cycles, which some investors, if they start out, they haven't seen yet. So then learning from others that this is how things can change and how you have to protect your ass. You have to have larger reserves, or you need to structure your budget differently. It just gives you those little pointers that just help you to become more successful. So yeah, that's a really good thing that you guys are doing there. So I appreciate you sharing that. And kind of
yeah.
shifting, because like I said, you're from IT to multifamily entrepreneur. So just curious, like that transition over, kind of like detail what's like a typical work day for you, and do you have any particular special morning routines?
So yeah, so I recently switched towards multifamily as full time last April. So before that is like now 9 to 5 job. I need to manage my work. I was focusing on this multifamily, before 9 a.m. or after 5 p.m. Like doing podcast stuff or underwriting deals, all those kind of stuff, or touring the properties, something like that, right? So now I'm become full time, and so my day starts with some kind of meditation and workouts. I'm not doing consistently, but I want to be consistent. So that's how I start my day. Then I will block some times calendar, so for underwriting and investor talks or podcasts, and also some marketing stuff, and planning for conferences or those kind of stuff. So mostly around underwriting deals, and also investor calls, or around marketing stuff, those kind of stuff.
Are you using any particular tools or resources like electronic or, like you mentioned, kind of meditation, journaling, any Google Calendar, anything that you use that kind of make it more productive for you?
So for meditation, I follow like either Tony Robbins priming or Joe Dispenza's, So meditations, I do that. For journals, I'm not consistently doing that, but sometimes I do journaling also, and for calendar, I use Outlook calendar for blocking times, and also Zoom for all these podcasts, those kind of stuff. Yeah.
Yeah, those are like the essentials that you need, especially you run a podcast, events, and speaking to some of it. So many things in a day that a lot of people don't realize. It's like a lot of stuff to operate the syndication business, but it seems like you guys have a pretty good handle. You mentioned, like I said, the meditation and that quiet time. When you're deep in your thoughts, what are some stuff that you're grateful for that you kind of that bring you to that level of success?
Yeah, definitely, grateful. Keep practicing that grateful stuff. Yeah, definitely, that will help you to grow, further from personality point of view, personal growth point of view. So yeah, I practice as part of that meditation. So even Tony Robbins priming also, you do that stuff. So yeah, I'm always great. I mean, practicing grateful for people in your life, parents, or colleagues or friends, or mentors or other teammates, all this stuff. Yeah.
Absolutely. And we'll make sure to have your contact information in the show notes. We'll blast out to our newsletter so our audience will be able to contact you. But for the people who are listening on the air, what's the best way to contact you?
So they can reach out me through, ushacapital.com, ushacapital.com/podcast, or info@ushacapital.com. And also I'm organizing virtual conference. It's multifamily AP360.com. So that's how they can reach out me.